Hello guys, I will explain the full Germany 40 breakout strategy with the three entry models. So the first entry model, I think everyone knows it. It's when the EMAs don't cross. So when the 50 EMA is above the 200 EMA, we look for buys. When the 50 EMA is underneath the 200 EMA, we look for sells. I will make this orange so it's easier to spot. Here it's orange and this one is orange. Okay, I now need to make it black so it's when I draw a new line it's black. Oh, it's still orange. But okay. So the first entry everyone understands. We wait for the breakout of the Asia zone inside the London session. So it breaks out, we enter with a candle takeover. So this is nothing new. It's not hard. It's easy. Entry model 2 is also not very hard. For example here, the 200 EMA crosses the 50 EMA. The 50 EMA is underneath the 200 EMA, so we look for a breakout to the downside. So for example here, this takeover is in the Asia session, so don't be confused with the entry model 3. This crossover happens in the London range, and that's why it's maybe in the beginning it's a little bit difficult, but it's not very difficult. So this crossover happens in Asia. We look for sells because the 50 EMA is underneath the 200 EMA. So here you look for sells, also with a candle takeover with a breakout. So with entry model 3, this is a little bit different. It's basically a crossover in the London range. So this is possible that it didn't have a crossover in the Asia, so we look for um, for this example I have to do it different because this is the orange one and this is the black one because we start looking for buys here. So for here, for example, it didn't cross in the Asia session and we are looking for buys, but it didn't break out. So maybe at 10 or 11 it crosses. But when it crosses, even if it isn't a breakout of the Asia's range, you still take the first breakout. So the breakout can also be in the middle of the Asia zone. It doesn't matter. So this is an option you can have, but also what is an option, for example, this can happen. So the EMAs do this. So here you see a crossover. I will make this one orange. So for example, this one is a crossover. It's orange and black. So here you see entry model 2 happening. So we look for buys. So there is no buy and it crosses over again in the London. So here we will look again for sells. So when is this not valid anymore? If this happens. If we have a crossover and it crosses over again. So when it crosses over 3 times, you stop just looking for that day, and that also happens quite often, but screenshot this. A breakout, I think everyone knows if this is your candle. The maximum breakout is of candle takeover is if it takes over the other candle with a maximum of 2. Of course, the best is if it's just 1, but that's basically the take or the candle takeover. So, for example, if we looked at it this week, 5 minutes, and then the EMA and the sessions. So this was today. Sadly, it was a loss, but this was today. We saw the crossover happening here. So we got stopped out. This is entry model 3. It didn't got a take or didn't broke out to the downside here, then it goes crossed in the New York, so it's entry model 3. This is entry model 2. Why? Because it crossed in the Asia, the 50 EMA is above the 200 EMA. Here we look for a cross or for a breakout above here. So what could we do? This was actually valid to take. You probably would have been stopped out, but what you can do is put it a little bit underneath or whatever what you like. This is entry model 1, didn't give us an entry. This is entry model 2 because this happened outside of the Asia, or this is entry model 3 because it's outside of the Asia, so this lost us. No, here there is no entry model. Here we look for buys. You see it's a loss. Here we look for sells. Oh, I'm looking at the wrong side. Here there is nothing. Here you looked for sells, but it was a loss. So, but now I will backtest it on FX Replay, because what's actually nice about the strategy is that the entry models, you never have multiple entry models at the same time. So if we look at this, this is the win rate. In 1 year it had like 107% net gain, I think. But yeah, that's fine. So for example here, what do we see? It crosses over. It didn't give us a takeover, a candle takeover outside of the zone, so nothing is happening. It's after 12, so we skip to the next day. So for now we look for a breakout to the downside. It's after 12, nothing happened, so we skip to the next day. We look for a buy trade. Okay, you see it crosses in the London session, so we look for the first candle takeover. So this is the first candle takeover. 2R, then we place an order. So this is a loss, and the setting is, oh, I have to put it above here. Oh, it's fine. But the setting is, it's a little bit, so I still didn't decide if I put my stop loss direct on the wick or a little bit above, but it's fine for this backtest, we don't do it. So here we see the EMAs are really close together, so but this is still fine, and why this is still fine is the price is still moving. This is only because it's calculating back. So here the price didn't move a lot, but before it did. So this is still fine. So now we look for the candle takeover. So this is the takeover. It's entry model 2 because it crosses. We take the 2RR. So now this losses again. And then we skip to the next day. Entry model 2. Oh, this was our entry. I missed it. Oh, no, this is not our entry, sorry, because the 50 is underneath the 200. So, but it will probably cross over. Yeah, and now we look for an entry. So this is our entry. Entry model 3, because it crossed over in the London. It didn't break out to the downside, because we here with the crossover we looked for a sell. It didn't happen. So now we target 1 and 2. Oh. This is unfortunate. But this is basically what I meant with put it a little bit underneath, but for the backtest we lose because it's the raw data. So now it's still the first entry model, so stop loss let's do it a little bit underneath the wick. To R, place the order. So it looks like a big losing streak, but that's fine. So this was entry model 2. So this is entry model 3. I would actually take this because it's so minimal. A little bit above. This will probably lose us as well, but that's fine. And why I already expected it to lose is because we see this. We see this. When you see price ranging, you basically already know it's losing. So next silver. Okay. So this is our candle takeover. Place order. This would be a win, but I put my take profit a little bit too high, but that's fine. It's a win. So this is entry model 1. Wait for the candle takeover. I would take this because it's 100% closure. Also EMA are going up. Market structure is up. So this is definitely fine to take. It's a little bit underneath the wick, but if it's like this, I do not mind. It's a little bit. So this is also a winner. Entry model 1. So we already know entry model 2 is not possible. So now we're going to look for entry model 3. So this happened. What do? This is our first candle takeover. Do it a little bit above. This is our first candle takeover. Place the order. Now it's a loss. Oh. Also it's really unfortunate because look at the timing, LF55. We look to the downside. Okay. This is the candle takeover. So place order, save. Okay, so this is probably going to be the entry model 3. Why I know it? Because you already see that the EMA is slowly going up. And most of the times it showcases it that this will cross and then we'll look for the up. Most of the time it doesn't always happen. So it didn't happen right now. But also we skip because it's after 12. So now we'll look for entry model 1 again. Now we see the candles are a little bit crazy. So it didn't give us an entry. That's sad. Okay, so this is an example. Maybe some of you already read it. Like the EMA stay together. The price is, yeah, it's like here. Here happens. It happens here. So this day I will actually avoid. So you could look at a entry model 3 because here it goes out. So you could look at it, but most of the time this is just choppy. It breaks out and it comes back inside of the range. It will go a little bit more in the range and then it has a final breakout, but this is at a breakout at 2. So then we are already out of the market. So this I always avoid. So this is a nice entry. What I'm also going to backtest is to make the strategy for the more advanced people like so I'm going to make it less mechanical for the advanced people because then we can also look at key levels because you really see when we zoom out that the price is reacting to for example the 15,000 key level, 14,000 key level. You really see that it works like a magnet. So maybe I can make entry or maybe I can use or make some extra rules around them. I'm not sure, but is just something to consider. Now this day I rather avoid, but this was our entry. Wait, I have to reset it. Maybe it was not that bad. Oh, it was bad. Okay, but our entry is here. So this is entry model 3. Even it crossed over in London multiple times or in Asia multiple times, then it crosses again in Asia. This is still fine. It broke out to the downside with the EMA. So you target to RR and it falls. So the next day, this is also entry model 2 still. Look, it broke to the upside a little bit underneath. 2R. So, but basically, I think the strategy for now it had like a 55, 57% win rate. I think you will get around 52, 50, not less lower, I think. And the really nice thing about the strategy is now we get a lot of entries, like a lot of entries. In the backtest it shows like double the entries that we hit before, so that's what I really like. So now it's a lot easier to actually get some payouts in the future. So hopefully this will help. I think I explained it enough for now what with the types of entry models. I do not think that they are hard. It's actually very easy. So here we see a really small candle. So normally I will do this, but to showcase it, do it a little bit lower because the price will a lot of the times come back and barely hits it. Look, this would have hit. Now it still goes lower, but it's just to showcase like that it would have hit, and sometimes it still goes up. So I will do some. I already missed it, but I already knew this was a loss. Why did I expect it to be a loss? This is the range. It's a little bit bigger to look at, but this was the high range and it skyrocketed through. So this would be a really bad entry. Also, this was our range inside of the Asia. This was just a spike from the Sydney session. So I would basically stay away from it and then look at a new crossover. So for the entry model 3. So here, this is entry model 3. No, it's a no trade day because it double crossed over again in the Asia. Okay, looking for entry model 3. Oh, this is so low volume, but this will be the entry. So we lost this one. But now if we go back to the stats, I think right now we had like a 50% win rate, maybe a little lower, but that's fine. You cannot always win, but it also wins a lot of the times. So this was in 2021. So when it had some huge spike and spikes from the corona. Oh, this was an entry, also a loss. Like normally what I saw, the first candle like this will most of the times be a loss. But it's fine. We cannot win always. So I hope this helps. I will show you the analytics quickly. Go to the next day, would be the order is placed. And you see eventually it goes up. This would be our entry, this. Because this is the first take over the second leg. Oh, hey, no, I missed it, but it's fine. I will put it here. We already saw that it won, but that's fine. Two, so, okay. So, but now if we look at the analytics, so load please. And this loading on the FX replay, it takes forever, but so for now we have a 55% win rate. No losing months yet. But also the no losing months, I think it is because you have a lot more options to enter. Thursday is still not a really good day, but it's still fine because it's above the 33% win rate that we need. Max consecutive losses is 6, so that's also fine. Max consecutive wins is 4, and it shows that we this the best win. It shows 6%, but it's basically what it was is when you have like 3 winners. When like how do I explain this in English? Fuck me. Um, when I enter on a Monday and it was a really big candle, so our stop loss is really big. It's a really long trade, so sometimes that trade runs for 3 days, and then the second trade was also really big, and then the third trade was just a really quick trade. So then you get 6% in one day. So, but the average consecutive wins is 2, and average consecutive losses is 1.6. And I am also going to test and consider what to do if it hits like 1.8 to put it at break even, because I saw a lot of the times that when it hits 1.8 and it didn't hit the 2RR, that it's a loss. So I'm also going to look at it, but that's for the next step. So it has around a 50% win rate, I think. So hopefully this is helpful, and good luck.